Okay, we're on the dot of 10. Welcome, everybody. Market profile has tripped over into D period, so that seems like as good a time as any to start today's first of 5 webinars that Emoji Trading are running this month, exploring some of the new features in our recently launched version 3 of the order flow suite. My name's Lee Harris. I'm the founder of Emoji Trading. If you're an existing client, we've no doubt connected via email. We may even done some one-to-one coaching at some point. There will be recordings available. We're always asked this, so we've put that front and center on the introductory chart. We'll be sending out details early next week about how you can access the recording. We may even post it publicly. I'm going to do my best to deal with all questions that are raised during today's webinar. You can pop them in the questions box within Zoom. It's labeled Q&A on your Zoom control panel. I'll keep a brief eye on this as we run along. If it seems pertinent to address it at the time, then I'll do that. Otherwise, as we wrap up towards the end, I'll go through the list and do my best to make sure that we address anything that we haven't covered as a result. You can also, of course, email us after the event if you've got any specific questions relating to your installation, your trading style, your account with us, that kind of thing. So, as you know, we recently launched version 3 of our order flow suite. This has been a really large piece of work, and we've released it in parallel with the existing version 2, just because there's so much in it. We've made a lot of changes to the input settings and the subgraphs, and we didn't want to impose this onto our clients and suddenly you find that it's also installed, you've got a whole different set of inputs on your charts, and your charts are messed up. This is not reasonable. So the summer is a good, quiet time to start to review new things in your trading, although we've got decent volatility this year. But what we have done is released version 3 as a parallel release so that at your leisure and at your convenience, you can install it and start to look at the new settings and inputs. We have done, I think, a pretty good job in putting some comprehensive documentation and tutorials together on our website at emojitrading.com. We will be enhancing this over time with more quick start videos, little 2-minute, 3-minute walkthroughs. And we appreciate there's no single correct learning style for everybody. And we offer classroom training courses periodically through the year. We offer one-to-one coaching if that's your thing. We write at length with pictures on the internet. We run webinars. We do videos. We have to do all this stuff so that you can make the most out of your investment in our software. So what we are doing this month, every Friday at 10 o'clock Central, is running some shortish 40, 50-minute webinars where we're exploring some of the new features within version 3 of the order flow suite. Now, we could spend a full day going in depth, and it's going to be too deep for some people, too shallow for others. It's not going to hit the right level or the right scope. So what we've tried to do is come up with 5 webinars on every Friday this month. And if you've registered and you're here today, then great, you're registered for all of them. You can get ongoing reminders. But where we can look at certain indicators and really draw out some of the new features. But we're not drawing out the new features in this clinical way, let's go and look at these 4 inputs. But I'm aiming to explore these features in a more real world way. Let's think about how we would apply the indicator, what it means in the context of the order flow, how you might fine tune it, so that you've got kind of some early ideas and recording you can go and look back at over time to get you started on the right path. So through August, after today, next week we'll be looking at the Absorption Pro Indicator, which is really powerful. Lots of people struggle to identify absorption and even get their head around what it means. So we'll be doing a full session next week on absorption, and we'll use that as well to get into our brand new feature, Advanced Pullback Analysis, or as I like to refer to it, how you trade the auction in the auction. So next week's going to be great, but we're not there yet. After that, 2 weeks' time, we're going to look at aggressive trading. I know many of you use edge zones, and you can use that to identify aggressive trading, but there are more subtleties to identifying aggression. So what we will do is go through how different indicators identify aggression in different ways and give you some ideas on how you can act on that. On the 23rd of August, we're going to deep dive just into the advanced features. So we will look at how you can access the EmojiZone data. Don't worry about Emoji Zones, we'll come to that shortly. But how you can look at the data that underlies the visualizations and the images that you see on screen and start to apply that to your trading, whether it's for beeping noises and alerts or even basic automated strategies. We'll also go deeper on the advanced pullback analysis and our advanced lookback filter. I'm also going to give you some neat ideas around how you can use order flow analysis with some neat tricks on Emoji Zones on longer timeframes like daily charts, and have your computer work as a really good memory for you on levels that either you've never spotted, or if you spotted it 3 months ago, and even if you drew a ray on your chart, you can't remember why it's there. So that's going to be very strong towards the end of the month. Then at the end of the month, on 30th of August, we'll have a wrap up. We will look at how you could build some simple day trading strategies using different combinations of emoji trading indicators. And we will also look at, the feedback we've had in the first 4 or 5 weeks of launch and use this as kind of a mop up of here's what our clients are asking, here's what they're thinking, here are common themes which are coming across. So we will use that final session to really wrap up everything that we've covered this month. But what about today? What are we doing? Well, today we are going to use Projector Pro, which is one of our most powerful indicators because it looks at every element of order flow in its analysis. It considers absorption, exhaustion, and aggression. And that gives us a really great vehicle to not only explore the new inputs and settings, and you can understand how you tune this indicator, and many of the tuning settings that you use on Projector Pro are applicable to other indicators within the order flow suite. But we will use that as a jumping off point to think about the advanced look-back analysis, and then we'll wrap up with unfinished business and how this can tie in to a chart setup in conjunction with Projector Pro to build a very simple breakout trading setup that you can use pretty much every day on most markets. So that's the plan for today, and a little teaser for what we're doing later in the month. As I say, if questions come up, please drop them in the Q&A box, and I'll do my best to address them in a timely manner during the session. Likewise, if this all sounds amazingly exciting, you've got friends and family who'd like to be involved, please pass them the link to the registration. So, Projector Pro. In our previous release, version 2, we had an indicator called Rejector. It's one of my favorite indicators. It's looked for a concept that was probably introduced to the market about 5 or 6 years ago in the indicator world, where one was looking for a combination of exhaustion and also aggressive trading in the opposing direction. So just to be clear on this terminology, exhaustion is the situation where at higher prices, we are running out of buyers. And this should be common sense. If we believe that the rules of supply and demand are true and they hold, as prices become higher, less people should want to buy, or we should see less volume of aggressive trading, of aggressive buying activity. Conversely, if we don't see that we run out of buyers at higher prices, we haven't exhausted, and QED, we are not too high. So the lack of exhaustion can be a sign of continuation. If you're long and you don't see exhaustion, hell, stay long. Let's squeeze some more money out of the trade, maybe tighten up your stops. But if we do see exhaustion, it's a clue that at least the prevailing direction is running out of steam, the momentum is falling. So we looked at exhaustion in version 2 of Rejector, and we looked for aggressive trading, a bid-ask imbalance, in the opposite direction. So in plain English, if we are at a high price and less people are buying, and suddenly we see aggressive selling, this is giving us a pretty good sign that we're kind of geared up to go back from where we came. And if you start to look at Rejector at some contextual levels, whether it's something session related, session high, session low, or some arbitrary mathematical horizontal line on a chart that many people are looking at, whether it's a fib, whether it's a daily pivot point, value area high, this kind of thing, The patterns revealed by the price rejector, we're running out of buyers and we've got aggressive selling, tell you the market sentiment as to what's going on. And this indicator has worked pretty well in version 2. But as I have coached various clients over the past year, and I've taught them how to interpret the order flow from first principles by reading the raw numeric data that's in the footprint, what has become really clear is we can improve on price rejector. And that's what has led to Price Rejector Pro. So now we incorporate the ability to consider absorption within Price Rejector Pro. So we kind of get this holy trinity of order flow signals in Price Rejector Pro. So not only do we see exhaustion as price goes up, we run out of buyers, we see aggressive sellers come in, but we can also tell the indicator to see if the buyer's aggressive activity is being absorbed by stronger passive sellers. So if we put all that together and we set the indicator up in the right way, we can really start to get some very fine, very accurate signals. Because in plain English, if we are running out of buyers at higher prices and this buying activity is being overwhelmed and absorbed by more powerful passive sellers, and we've got aggressive selling coming in the markets, I think you're getting a pretty clear sign that, well, you certainly shouldn't be buying, at least. You know, it's time that we should go back the other way. So what I'm going to do is I'm going to flip over to my Sierra chart on the screen share, and we'll put the indicator on a chart and use this as a way of going through some of the settings on Price Rejector Pro. So if I just pick the right window, you should now see a Sierra chart screen with a footprint on it, and we're looking at ES live right now. If someone could just confirm that in the chat box with a Y, that would be great. Perfect, thank you very much. Okay, so the way I've got this footprint chart set up is we have got a classic bid-ask footprint. You can see the numbers in footprint. And those numbers are representing the quantity of market orders that have lifted the offer or hit the bid. The numbers in orange are aggressive bid-ask imbalances. This chart's set up to a 400% imbalance. So here are the aggressive traders who are more aggressive than 400%, 4 times more buying than selling. Why 400? Hell, why not? Some people use 3, some people use 6. There is no right answer. So we'll use 400. The profile on the background of this footprint is delta. So I'm looking at the delta at price at each level. So it's giving me the net of whether at a given price level, more contracts were bought or more contracts were sold. I use this as a way of identifying absorption. But you know, there are subtleties to reading absorption. It's something a lot of traders struggle with. But we'll use this as we put price rejector on this chart to start to understand how the indicator is doing what it's doing and why. And then to the left of each candlestick within the footprint, I've just got my open close markers. I personally don't use a candlestick body, but nor do I use a footprint with no reference of where we've opened or closed. For me, I just want a simple indication here. Now, this chart setup, including the summary data, the numbers, bars, calculated values at the bottom, is something we make available through our quick start templates. If you go to emojitrading.com and under documentation and support, you go to quick start templates, you will find this page, which includes various footprint chart setups that you can use in Sierra chart, as well as some quick start configurations for our various indicators. And you can download that file whether or not you're an Emoji Trading user. You will end up with a bunch of study collection files, which once saved in your Sierra chart data folder, you will be able to access on the analysis menu within Sierra chart. So what I'm looking at here is one of 2 chart styles which we actually coach with, and we call it Emoji Order Flow Guru. And this is the 1-column style. The 2-column style adds some further numerical data. But for the purposes of today, we're using this. So if you just want an easy-to-use footprint setup out of the box, visit our website, download the Quick Start study collection, save the files in your data folder, and boom, in one click, you can have a chart that looks like this. So let's put price rejector on our chart, and we'll start to explore some of the settings that are new in version 3. So here's the price rejector. We have a lot of inputs. Don't worry about that. We'll be going through it in due course. Within the order flow suite, we have used the same naming conventions for inputs and also the same positions for each set of inputs relative to each other in all indicators that use the same kind of inputs. So price rejector has settings for aggression, imbalances. Imbalance settings will always appear as the first inputs within indicator settings on any indicator that concerns itself with aggression. Now, we've also tried really hard to make sure that the input names are quite, well, both descriptive but also accurate. I'm a firm believer that you need to understand stuff from first principles, which is why we teach people to read the raw footprint data. And, you know, I don't want to put some magic name here like trader power, when actually, mathematically, the bid-ask diagonal imbalance is exactly that. What is the diagonal imbalance percentage between the bid level and the ask level, and what's the minimum value that we will allow through a filter in order to display something? So the ethos which we put into the indicators is be very accurate in descriptions and very transparent. Let's not mask stuff through weird magic branding. Yeah, we're at risk that some clever person is going to reverse engineer everything they've done because this makes it clear as to what we're doing. But I believe more that if we help people understand what they're doing and they can clearly understand things from first principles, they will get more value and more utility out of the products we produce. So our first set of inputs relates to the imbalances we're looking for. I can set up a 400% imbalance as the criteria for a price rejector. Do I want to compare 0 on one side? Absolutely not. That doesn't interest me. Is there a minimum volume I want to look for? Perhaps I don't want to consider imbalances that happen on low volume. If the aggressive volume, so we see this orange, well, 500 now, maybe I want to try and get rid of anything happening overnight. So I'm only interested in balances where there's at least 200 aggressive contracts. That's what this input does. And likewise, minimum bid-ask delta. We will look diagonally between price levels, and we are looking at the difference between the ask volume and the bid volume in order to filter out any low volume imbalance situations. And you'll find these imbalance inputs in many different emoji trading indicators, always with the same naming conventions and the same principles as to what they're doing. The exhaustion and absorption filter is brand new in price rejector. For now, we're going to leave it on exhaustion. This is our classic price rejector mode. We'll also ignore this. We'll come back to that very shortly. Required price reversal should be quite self-explanatory. Do we want the bar turn around? So if we've got a price rejector condition at the high of a bar, if we say we require a price reversal, the bar must close lower than it opened. So price action is confirming the order flow condition that has occurred at the extreme. If we don't require price reversal, potentially we get signals in price rejector at both ends of the bar. The next set of inputs relates to our advanced lookback filter, which we'll come back to shortly. We can filter even further on price rejector. Price rejector is considering the conditions at the extreme of the bar. So if we look at this candle here, where we've got 12 contracts that hit bid at the bottom, we can set a maximum volume for either the bid volume at the bottom or the ask volume at the top that we will consider. If this print was 850 versus 0, then I might think, you know what, that's not really showing me a sign of exhaustion. So let's say you only want to see price rejector that only sees volume at the very bottom or the very top of 20 contracts or less. You can specify that using this input. Likewise, if you're familiar with the order flow ratios that consider the ratios between the bottom 2 or top 2 prices on a candle, we can also specify this ratio. If we have got a large number here and a small number here, it's a sign of exhaustion. At lower prices, Let's just turn the data off so I can actually reference that particular candlestick. Here we go. I'll go back into the price rejector settings. Okay. If we think about the bottom levels on a candlestick, then if we divide this 208 by 12, which is going to be 18 or thereabouts, it gives us a rough measure of the exhaustion level. 12 is significantly less than 200. If this was 100, we would have a ratio of 2, which is not so strong. So we can actually use this coarse ratio to have another filter on whether or not we will have a price rejector condition appearing. So you can specify either or both the maximum contract size you're happy to see at the tip, as well as the, let's call it the exhaustion ratio between the two extreme price levels. What I'm going to do now is we'll get some price rejector signals painting on this chart, then we'll look at the effect of these inputs. So if I go Emoji Zone visualization, and I set this to fixed projection, and I project forward by a distance of 1 bar, what the indicator is going to do, very quickly, you can see where we've got a combination of exhaustion, so our volume is reducing at the bottom of this candle, and we've got aggressive trading in the opposite direction. We are projecting a zone forward by 1 bar. It's an Emoji Zone fixed projection, 1 bar. And we're putting an alert symbol. This is the demand and the supply condition subgraph, either above or below the bar, depending upon whether we've got supply or whether we've got demand. So here we've got some very loose settings on the price rejector. Just going to try to get the chart into a position where we can see some more that will be good for examples. Here we go. So let's bring up the study settings once more, and you can start to see the effects of some of these inputs. You can use the various subgraphs to change the appearance of these alerts. So we have a supply symbol and we have a demand symbol. If I want, I could change that supply symbol into text. And let's make it really obvious. I could say text to draw PR, exclamation mark, and apply. Now I can have a computer screen at me, so we've got a price rejector. I use this on things like delta divergence. I'm not so mad on that. I'm going to turn that back into the triangle. Triangle down, here we go. We've also worked to make sure the default colors work pretty well, whether you've got a dark background or a light background. And we use orange as a kind of alert, pay attention to this, wherever it's appearing. As well as this supply and demand symbol, we have got a condition. Now, these subgraphs will evaluate to 1 or 0 whenever we have got the indicator triggering something. So in this candle here, where we've got the supply condition, the study supply condition subgraph will be 1. If we don't have a supply condition, it's going to be 0. And in a later webinar, I'm going to take you through how you can start to use this information to very simply build alerts or use the Sierra Chart spreadsheet trading for automated trading based upon this data. Now we've got a chart, though, with price rejector coming in. Let's have a look at some of the new inputs which allow us to filter. We can see in this candle, we've got 13 as the volume that lifted the offer at the top of this candle. If I set the maximum extreme print volume to 10, maybe I'm only going to accept a price rejector if I've got a single print, it disappears. The same logic applies to the ratio inputs. I can't do the mental arithmetic that easily on what I've got, but we can either filter out these signals based upon the absolute volume that's printing or the relative volume, the ratio between the two price levels. Let's take that back to 0 so I can illustrate some more filtering possibilities. Now, we've got this exhaustion and absorption filter. By default, the indicator works by only looking at exhaustion. Here, at the top of this candle, we can see we've got fewer contracts being aggressively bought, as we walk up in price. We've got an indication because I've got exhaustion and I've got aggression. in the opposite direction. If I use the exhaustion and absorption filter, though, my favorite setting is actually exhaustion consistent absorption, which is the tightest setting. That signal disappears. Now, why does it disappear? Well, what we're looking for with absorption is we're looking to see that we have had more buying than selling at each price level through the area of exhaustion. In other words, positive delta. You can see that at the 3 price levels, which showed exhaustion here, we've got a blue delta, a red negative delta, and a blue delta. So 2 positives and a negative. This was +3, this was +50, this was -60, give or take. So if I use the tightest filtering, exhaustion and consistent absorption, through the area of exhaustion, I want every price level to be absorbed by the stronger passive sellers who are at the top. This is how I use it, because I don't want more signals. I want less signals. I want the computer to really keep me away from trading, because when I trade, I am only facing the possibility of losing money. So what I want the computer to do is filter out all these possibilities and just give me the opportunities with the highest likelihood of success based upon the order flow. So I tend to run my charts using very tight indicator settings. I kind of rationalize this, that the poor small amount of limited equity I've got in my trading account only deserves the best opportunities. And that's how I use psychology to stop myself from overtrading. If I loosen this a bit, though, and look at exhaustion and aggregate absorption, we've got some levels that have come back in. Now, if we look at the bottom of this candle, we've got positive delta here, negative delta here. So the aggregate absorption is considering the scenario where, as we look at the range of prices that have exhausted, the total delta within that area supports absorption. So if I go consistent, that disappears. I want negative delta at every level, and I don't have negative delta here at the topmost price that's showing exhaustion. But by selecting aggregate absorption, we are calculating that through this area of exhaustion, net, we still had negative delta. So as a result, we're happy to class that as a price rejector. But I want to show you how, by filtering out, we get the best signal. So we're going to use exhaustion and consistent absorption. We can also think about where we'll have the imbalance position. So classically, we want the imbalance at the first available slot that the top of selling imbalance can occur. So the quote was at the top of this candle. Therefore, the price level 1 tick away from the top is the first point. But we can loosen that if we want. We can say extreme +1. So we will consider here the 107 or this 356. If that was 356 against something 4 times smaller, so if that was 75 or less, if we had an imbalance here and not here, and we were saying extreme +1, that would qualify. Or we'll even consider an imbalance within the zone. So if we have got a sell imbalance anywhere within the area of exhaustion, and this works well on deeper levels of exhaustion, longer term charts, then we're also happy for the indicator to allow the signal through. Okay, we've covered the imbalance position. We won't touch pullback today. We're going to do that next week in terms of absorption. It's a good starting point to be looking at pullback. So that's pretty much all of the filtering options that we can put in place on Price Rejector. So I'm looking at 4 times more aggressive trading in the opposite direction. I want exhaustion and consistent absorption. If I choose, I can say I want the strongest absorption to be happening. Now, look at these 2 candles. We see big positive delta here. If I look at the positive deltas here, there's more positive delta at this level. If I set the absorption filter to be the strongest absorption, we lose this condition. So what this filter is doing is saying within the area of exhaustion and absorption, we must have the strongest level of absorption in place within the area. And this is another filter I tend to use on shorter term charts. Now, Jack has asked, does the exhaustion and absorption filter look at the last 3 levels only by definition, or can the number of levels be selected by user, i.e. 4 ticks versus 3 ticks? It's dynamic, Jack. We require a minimum of 3 levels in order to determine exhaustion. 2 is meaningless. We don't have a slope, really, with 2. So we have at least 3, but we are calculating however long the sequence of volumes is that's showing exhaustion. So exhaustion is our starting point. Then we will filter down within that exhaustion based upon the parameters that you put in place for absorption. And this really can start to come into play on slower charts with longer candles. So here I've got a 30-minute footprint going on. If I add price rejector to here, I'm not going to change any of the default settings other than just getting the display on. So what you'll see here, Jack, is if I turn this into fixed projection and we do this over 1 bar again, then at the point where we've got some price rejectors, here's a great example. We're exhausting over what, 1, 2, 3, 4, 5, 6, 8 or 9 price levels. Now, these all happen to have absorption, but you do not have to define as a user how many levels that we are looking at. The computer will look for the exhaustion and then will further qualify based upon your inputs what we're doing with absorption and aggression within that area. So hopefully that has answered you. Great. Okay, let's go back to where we were. So we've got a price rejector on this chart. It's an 8-tick reversal chart, and we've got a few signals going on. Now, the clients who have taken coaching from me know I tend not to use such fast charts. And my main trading chart these days is actually 30 minutes, but sometimes I will zoom in to look at the action. So we've got a way of fine-tuning price rejector. Let's just go back to the deck. Here we are. Now, I like to think of what our indicators identify within the order flow as events within supply and demand. We're not doing anything magic. We're looking at certain concepts like exhaustion, absorption, aggression, and we're allowing you to filter how these are visualized based upon parameters and criteria that you put in place. When that occurs, I class this as a supply-demand event. But as we saw on price rejector, they can happen in many places. Now, what's really important is context. As the market's churning around, depending upon your chart type and your chart periodicity, you can be in supply and demand events that happen to be captured in the arbitrary candle that you've chosen to slice your chart up by, but they're not necessarily tradable. So our advanced lookback filter allows you to start to filter out these supply and demand events in a way that considers time and price, but is independent of your chart type and your chart period. So to put this into English, the kind of things that we can do is say, only show me supply and demand events that are within 2 ticks of the day session extremes during a rolling 30-minute time window from the start of the session. So let's imagine you're looking at a faster chart, 10 range, 8-tick reversal, 5 minutes. I really don't mind. There are enough people out there trading off market profile that we know there are rotations every half an hour. And when you start to look at the edges of 30-minute candlesticks, you can see they're generally quite orderly. And, we will rotate during 30-minute periods or 15-minute periods. So people trading off longer time frames might be driving more volume in the market. And it's very easy as, we get closer to the action on our faster and faster charts to lose track of the big picture. But equally, we might want to do some of this more granular analysis using the shorter term chart. So what do? We have 2 or 3 charts open in different time frames. We can use the advanced lookback filter to actually abstract some of these time frames into our faster chart. It's easier to show than do. So let's switch over to the chart and I'll show you some ways in which we can use this filter. So we're back on our price rejector chart. Let's bring up the input settings price rejector, which momentarily disappears. There we go. So I've got price rejector. Now, what I've got here are the inputs to the advanced lookback filter. This is also present in many emoji indicators. Anything where the existence of this supply and demand event gets benefit from being qualified using time and price, we've got this set of inputs. So we can do simple filtering. We can say we only want to see the indicator if the bar has made a higher high or a lower low over a period of bars, so bar quantity. So if I set this to, 3, let's see what happens on the chart. Hopefully we can start to find some conditions that filter themselves out. Of course, I've just filtered them out. We're not going to see them, which is a daft starting point, really, isn't it? What we'll do, let's loosen up that lookback filter to begin with. So if I say, look at 1 bar, we can see we've got a price rejector supply condition here. It's meeting our criteria. We've got exhaustion, we've got consistent absorption, we've got aggression. We're not considering the high of this bar over preceding bars. If I turn the bar quantity into something more than 1, so we can immediately see this bar is lower than this bar, I turn that into 3, the condition disappears. So by using bar quantity, and this is similar to what we had in version 2, we can look back over a previous number of bars, and we require that for a high condition, supply condition, the bar's price must be equal to or higher than the highest high of the preceding number of bars. Likewise, the low, we need the bar to make an equal or lower low than the previous, in this case, 3 bars. That's quite simple, but the thing is, on our 8-tick reversal chart, 3 bars is meaningless to the market. The market does not care that we are looking at an 8-tick reversal. So we can start to use some other contextual filters. Session high and low, this should be quite self-explanatory. What we're now doing is saying, only show me price rejectors which are occurring at the high or low of either the day session or the evening session. So here's a beautiful example. This is today. We've got price rejector here, and it's happened at the session high. As you can imagine, these can start to be some pretty strong signals. You know, we are truly at the edge of what's going on. Now, we can allow you to choose between filtering at the session high and low or the daily high and low. If I do daily high and low, so we had non-farms today, the overnight range, as has been the case quite a lot of late in ES. The overnight range is wider. We haven't really broken the overnight range until later in the day. If I say daily high low, it disappears because the intraday session high is lower than the daily session high. So you can start to use these filters to get some context into how the indicator is being applied. We can also use minutes. Now, you don't need to be using a minutes-based chart in order to use this input. We can say, look for the highest high or higher low over the past 15 minutes. And what the software will now do is, even if you're using a range chart, a reversal chart, a volume-based chart, it considers the timestamp of each candle, and it will still count time as it filters out conditions. So we've got a price rejector here. Let's see. A 15-minute period started about here, so this qualifies in. We can then take that idea a little bit further. I only trade the day session. I am basically looking in my trading for opportunities based around certain market profile structures that may occur, and I use the order flow to finesse my timing and my entry levels for these events I want to occur. So for me, the 30-minute chart is pretty important. I'm just going to take the price rejector off here. Let's hide that. Here we go. So 30-minute chart's quite important. I'm able to read this vertically, but a quicker chart enables me to look inside this 30-minute chart and see what's going on. The challenge is, though, this is really tall. I run my monitors in portrait orientation. I like a lot of height. I want to see the whole day, but on a webinar, I can't ask you to do that. But if I take my chart horizontally, when we've got a lot of activity going on, so let's look at the first half hour on this 8 range chart. I need a lot of horizontal space to capture what's going on from the open at 8:30 through to 9 o'clock. Now, there's a lot of scrolling here, and it's very easy. I see this a lot with clients that they'll just turn on their chart, they like 8 tick or 10 range, whatever, and they start trading. They're not looking at the big picture. The reason they're not looking at the big picture is it's really hard to look at the big picture when this is all you can see. And you need another chart to look at, but this one's now too tall for my monitor. So you know what? It's easy to do this. Now, if we just look back by 15 minutes or 30 minutes, the challenge we've got is if I look back 15 minutes from 8:49 and 40 seconds, I'm going to look back to 8:34 and 40 seconds. That, if I look back 15 minutes from here, I'm going back 8:35. So this rolling 15 minutes is quite meaningless in the context of larger time frame charts that enough market participants are looking at for these rotations to be meaningful. So we've got another option in the Lookback filter that's really neat. And what we can do is say, filter out higher high and lower low using time, but in a top of minute period since the start of the session. So what I can do here is select this option, top of minute period since session start. I set this to 30. Now, what my chart is doing is it's considering the top of the hour and the bottom of the hour slices. So as we open here at 8:30, we reset the clock. My look back window is starting at 8:30, and it's going to run through. We've got a price rejector here. It's going to run through until 9 o'clock, which is somewhere in this candle, and then it resets. So I've got my 30-minute period establishing the high and the low for this range in my look back. Once 9 o'clock flips over, I reset my high and low. So even if we've had a high up here, from 9 o'clock onwards, this is going to be my high that I'm using as a reference point. So what we're now doing on this faster chart is we are actually looking at the rotations within each 30-minute candle and using the edges of this candle to look back on this much faster chart. And this is a really powerful way to impose the chart type and periodicity that you're using on your bigger picture into your shorter term trading entry level and timing finessing chart. So that is the option is top of minutes period since session starts. We go through some pictorial examples on the website explaining these concepts. We put up some candlesticks and we show you here are like sliding windows of time. So that's how we can use price rejector and our input settings to really qualify exhaustion and absorption. In addition, we can now use the advanced lookback filter in order to apply contextual filtering based upon time, but also, and I neglected to just go through this, as points out, we can also use price as a filter. Now, many times you'll see that we'll auction up to maybe 1 tick or 2 ticks within the session high, and we'll get an order flow condition, but the indicator doesn't pick it up because our higher high, lower low filter is looking for a higher high or a lower low. Within the advanced lookback filter, we can actually put in a threshold of how many ticks inside the higher high or the lower low will we allow through. So if I set this to 1, now I'm telling the computer to say, if we have got a price rejector within 1 tick of the highest high of whatever time period I'm filtering, show it to me. So you can start to pick up some pretty significant signals this way. And even though we're loosening the filter, they can be very valid. You know, oftentimes we'll see the market auction to 1 tick or 2 ticks of a contextual or a structural level, and it comes back. People play games. You know, they want to see if there's reaction to these prices. Now you can pick these up and have the computer flag this to you using the supply and demand events of our indicators combined with a forgiveness factor, a tick threshold inside what's relatively high or relatively low. So that's our advanced lookback filter. Let's go on to one of the other new features that we've introduced in version 3. Emoji Zone visualization. So I've mentioned how I regard something that happens from one of our indicators as a supply or demand event. We introduced Emoji Zones about a year and a half ago, and we've worked quite significantly to improve both the visualization quality, performance, and also data access of the Emoji Zones within this version 3 release. And what Emoji Zones are about is when we've got a supply and demand event like a price rejector, let's use the order flow to track and qualify these events as price levels retrade. Easiest way to explain this is to show it in action. So we'll go back to our chart here, where I've got a price rejector, and I'm going to loosen up the filter a little bit. Let's have no filtering at the moment. We'll probably get too many. Well, you know what? I'm going to look back over 3 bars. I just don't want to cluster the chart with too many signals, but I want enough signals to be able to give you some examples. Emoji zones appear in many of our indicators. Any indicator which looks at a single price level or a range of price levels in order to identify a supply and demand event can visualize using a range of Emoji Zone visualizations. The simplest visualization is fixed projection, which we've used here just to get a colored block where we have had an event. Let's put one into the display area. Let's use this one that's this nice top. And we can start to see some of these different modes. So our simplest visualization is fixed projection, and I can determine how many bars we will project across using this input, fixed projection distance, let's say 3. Now I'm going 3 bars across. It's giving me a bookmark, really, but this 3 is arbitrary. We can move up a level of intelligence. So let's extend until future intersection. And this works in conjunction with this extend until label. And this is also a version 2 feature. What I'm doing here now is I'm putting lines at the highest and lowest price, or if it's only a single price level event at a single price. And these will continue until we retrade. And you can see this says label text. If I change this to PR, exclamation mark, now I know that this is price rejector. You can think of this as showing naked levels. You can use our POC Pro Indicator as a way of extending naked POCs using this. So here's a price rejector at the bottom. We bookmark it with these extend untils. But at the point where we trade here, we no longer project. So this is good for things like unfinished business, which we'll come to shortly. Our next level up, though, is how do we really track the progression and the condition of these levels over time? And this is where we can use our Emoji Zone dynamic mode. We won't cover pullback. We'll start with that next week. Now, what I'm doing here is I'm projecting out my price rejectors. I've got one here, I've got one here, I've got demand. This is new supply or demand event. This happens to be demand. And we can control the colors and the appearance of this using the Emoji Zone settings. So here is my color for new demand. It's green color. You can change it, of course, down here. Here's my color for new supply. We'll come to these other options in a moment. We can also do transparency, line width, and line style, but this will come clear in a moment. So I've got price rejector here, price rejector here. It's continuing around this, 97.25, 98.5 area. Now, what's happened? This candlestick has broken the level. It's closed below it. So we go from new demand to new supply. We go from green to red. Levels change their role according to how they trade. But that's only looking at price. That's quite coarse. If I don't want to see this role reversal, I can actually select not to. So here's our demand, here's where it changed to supply. If I don't want to see the change in state, I say no. As we close below it, the zone stops. I personally like to see the state. But here I was only evaluating on price. That's too coarse for me. I want to look at the order flow. Now we've got some interesting stuff going on. Let me talk you through what's happening. What we've got here on this first candle is a price rejector indicating a new supply and demand event. The event was a price rejector. As this candle traded, we traded within that area, and the order flow told us that the demand was continuing. So we've now changed the appearance into this transparent green showing continuing demand. That's set by this color, continuing demand, and also transparency level and a line style. The next candle that made its own price rejector it actually traded in a way that told us the demand here had exhausted. So we turn it into a dotted outline. Those are the default settings, because you just need to be aware something might change. That's telling us the level has held for now, but whatever demand was propping this up has run out, it's exhausted, because there is not infinite demand. Traditionally, technical analysis, people say the more times a level trades, the stronger it is. Well, that would imply that when 29.89 trades, it's going to hold forever. We know levels don't hold forever. The other problem with that idea is you need a level to trade twice in order to draw a line. If you just follow this train of thought, then your first opportunity to trade it is actually the third touch, at which point it might break, depending on your periodicity. And then you're a retail trader who goes, oh, yeah, they took out my stop 2 ticks behind the level. Well, yeah, that's because this was the first point. This supply and demand event was our first level we drew. If you only looked at price, you couldn't even draw it. You didn't know it was there. Maybe you drew it here at the second touch because we closed above it, but you had no chance to trade it until here. As order flow traders, using some visualizations, we've got a chance to trade here. We've certainly got a chance to trade here based upon qualifying the order flow. So we evolve through states of new demand, continuing demand, exhausted demand. Now look at what happens here. We traded down into this area that had exhausted, but it held for now. But sure enough, it broke. And this cycle continues once we've role reversed into supply of new supply. Let's find one. Here we go. So we've got new demand that happened to exhaust. We don't have to go sequentially through these states. New demand, exhausted demand, converts to new supply. The way we trade tells us it's held, it's continuing supply, but actually this candle broke it. We stop. So the emoji zones are very good at giving you visualization of what is above and below us together with its quality. And this can be good for finding levels intraday that you may not even know about. So as we've traded up here, on our little monitor that we're using here, I might be blind to what's going on here. But as I get nearer, I can see here is some supply that's never traded. The likelihood of us blasting through this level first time round is pretty low. But this could be a good potential exit. Or if I've got a short bias for the day, then actually maybe I could look to go short near the edges of this because my risk is defined by the other side. And if I know that some supply was established however far back that was, I don't have huge amounts of data in this chart, but whenever that was, but I can't remember because I've only been looking at my monitor for the last 20 minutes, it tells me we're very unlikely to go beyond this. So if I'm long, it could be a reason to take some profit. If I've got a short bias for the day, here's my clue of a decent level to potentially get short. So the computer can keep track of these levels much better than we can. So if we start to combine this emoji zone dynamic analysis with some clever contextual filtering, So now, why don't we think about filtering on session high, session low? Now, my chart is telling me the edges of any given session that have experienced price rejector as a supply and demand event. But wherever I go through this fast chart, the computer is helping me identify edges of previous sessions that the market has rejected. Now, let's see, can we find one here? We should do sooner or later. Let's see. I don't have so much data in this chart. Let's have a look. There's one that hasn't worked out brilliantly. That was intraday. You will find that this can be very useful if you pick something up in the overnight session, and you can use this as kind of a qualifier on what might happen during the day session. So what have we got here? There's a level. What is this telling us? We're during the day session has traded down here. This would have been a level of demand from somewhere previous in time that has exhausted. So as we've gone low, it didn't hold us. We went straight through it. Okay, that auction, that rotation then broke it. But you can now have the computer remembering things that either you haven't seen, or if you have seen and you've just drawn a ray to extend it across your chart, you may not remember what that ray means over time. And this is the point of using the computer. You know, it's there to do the grunt work for you, so you can actually make your trading decisions. Sometimes this stuff can be uncanny, but it shouldn't be because it's supply and demand in the market. So you'll often find we will trade to the tick, and we've got big absorption here, of these levels that present themselves. As this new demand broke and became new supply, then that supply on its first test has held. So that is our EmojiZone visualization using dynamic mode. Well worth exploring because it's making the computer do the things the computer is good at, which is seeing things and remembering things and freeing up our brain to actually make more complex decisions. So we can use the EmojiZone dynamic visualization to track and qualify the supply and demand events that the indicators present. Here's the life cycle of an emoji zone. So an indicator, whether it's Absorption Pro, Price Rejector Pro, it really doesn't matter, we find a new event, it's solid green. As we retrade, this new demand turns into continuing demand. And we show it because by default, it's transparent and it has an outline. If the nature of the trading tells us it's exhausted, we make it hollow. Let's make this visually weaker. So it's not to say we're going to plow through it immediately, but we shouldn't rely on this as holding us, or maybe we can look for opportunities up here to get short. As we break it, we change role, if you so wish, and we continue monitoring the condition of this level over time. At the point this role reverse cycle breaks, we have potentially 6 states, we end the zone. You can actually select to have more cycles, but we'll come to that in, I think, our 4th webinar when we look at longer term analysis. Now, Christine has asked, could I comment on how to decide the setting to use for dynamic break threshold? So what we can do is we evaluate the close of price relative to the zone. By default, we have the setting of 0 as the threshold. If we close below an area of demand or above an area of supply, then we consider that the zone has broken. But you can set a threshold to allow for thinner markets. Sometimes on CL, you will see it plays with levels with a 2-tick, 3-tick threshold. This is something to experiment with. ES can be quite strict. The bonds are certainly very strict for thick markets. Thinner markets will have more wiggle room. NASDAQ, you probably want to use about 400 ticks, given how thin that is. So you can use the dynamic break threshold to determine how much forgiveness you will use for the close of a bar above or below a zone before you actually regard it as having broken. I think CL is a very interesting market to go and experiment with a little bit more looseness on with these levels. Of course, this depends upon your chart type, your chart periodicity, but it is a neat way of fine-tuning the zones based upon your trading style, your appetite for risk, and this kind of thing. So hopefully that gives you some direction, Christine. Kendall has asked, could you build a 30-minute day session only chart, change the volume by price or the tick size to make it fit the screen, then overlay the price rejector levels onto a 10-minute day session chart? I'm not going to do that right now, Kendall, but when we run our advanced webinar on how we are able to access the data that's within the emoji zones, I will do a worked example of how we can take higher time frame analysis, for example, a 30-minute chart, and overlay the levels onto a quicker chart. So I'll make a note of that as a specific example of how we can use the data contained within these emoji zones and bounce it between different charts from our chart book. Rob is asking, when will the video be ready? Early next week, Rob. Christine, so absolutely. There are a lot of variables within the indicators and timeframes and fine-tuning parameters and visualizations. And this is compounded because, of course, everyone uses different chart types. So what we have done is not look to impose any right way of doing it, but I'll give you enough parameters that you can fine-tune and find something that's comfortable. You know, in the same way people are more comfortable on a 5-minute or a 10 range or an 8-tick reversal, you may find that your particular secret sauce is using a 1-tick dynamic break threshold with an emoji zone on your 7-tick reversal that is optimum for how you view the overnight session VS. There is no right answer. We think it's important to at least allow you to fine-tune. So that's the life cycle of an emoji zone. What I now want to do is think about the fact that we've seen an interesting reversal indicator. We've seen price rejector. It shows when our holy trinity of order flow events, absorption, exhaustion, aggression occurs, and we can filter this contextually using advanced look-back analysis, and we can track how these levels have traded over time. So we've got a potentially good entry signal. Now, in Japan, the subway is really crowded, and this image shows one known as the subway pushers who really push people onto a train. This, for me, represents typical retail traders. They will find an indicator they really like, magic indicator, green arrow, seems really good. I got it on the MQL store. And when this indicator flashes on their chart, they trade in the direction of the indicator. Now, they then have a take profit at 20, stop loss at 10, and they lose money. Why was that? Because they didn't have a plan for where they were going to exit the trade. If you don't know where you're going to exit the trade, why on earth would you enter a trade? If we trade with order flow and we're thinking about the context and the structure of the market, just because we got a price rejector is not reason enough for us to take a trade. Sure, you might find you can say take profit 8, stop at 4, and more often than not, it's going to make money. But you've still got a chance of losing money, and I hate losing money. I like green days. I want every day to be a green day, otherwise I've wasted my time. Time is really precious. So I think it's really important to establish a target to trade to before you actually open a position. Now, I think you'll appreciate the emoji zones in dynamic mode, as well as giving you entry levels, they're giving you potential exit levels as well. If we know that an area of new demand or new supply is unlikely to break on its first retest, then as long as we've got a bias, we could very simply say, you know what, I'm going to trade between the zones. I'm going to try and do it in my longer term bias, but I will actually use solid red, solid green as my boundaries for my trade. So at least you've got a target. What we'll do now, though, is just illustrate using unfinished business how this indicator can also provide a neat way of using targets. So I've done various videos in the past on unfinished business. It's quite well documented on the web as a concept. Just as a very quick walkthrough, we identify unfinished business by the lack of a 0 at the top price on the bid, or the lack of a 0 at the bottom price on the offer. So let's have a quick walkthrough of the mechanics as to why this happens. At the top of this candle, the auction in this candle got to the point where our quote was here. I really don't care what the prices were, but when we think about this box at the top, this represents the inside market. 27 contracts lifted the offer, 717 hit the bid, and the auction completed. Why did the auction complete? Because these 27 contracts were not sufficient to consume the inventory sitting in the order book and take us one tick higher. How do we know that? Because nothing hit the bid at this price level. The 0 tells us that the auction finished. It's a completed auction. If we think about the mechanics of this candle at the top, well, we've got quantity on both sides. So what happens mechanically? Well, 247 contracts lifted the offer, and that was sufficient for the inside market to tick up. We went to this price level being bid, and the market was quoted one tick higher. 42 contracts hit the bid, nothing lifted the offer. Those 42 are enough to send us back down. So the market quoted above what we see, but nothing traded. We do not know if there was sufficient volume or not at this price level for us to run out of buying. This probably fell back because of absorption from large passive seller here, and we dropped back down. The 0 tells us the auction completed. The quote never got beyond here. The quote did get beyond here. The market has explored price up to this level, but we don't know the answer to this question as to whether there is demand beyond here. If we believe that the market exists to find edges and price auctions up and down to find out when price is too high and price is too low, then the presence of an auction that is unresolved or unfinished gives us the implication that there is a price level beyond here, may only be one tick, that is too high. Therefore, in order to resolve this auction, we are likely to revisit it, maybe only by one tick, but for as long as we don't have a 0 printing here, we have got a mystery in the market that the auction process must resolve. But we have to handle this concept with care. There are people who will use, for example, the Sierra chart built-in feature of highlight non-zero, bid at the top, non-zero ask at the bottom, and think every candle has an unfinished auction. So let's trade it. Well, you can go way, way offside if you take that view. And there's degrees of context. You know, if we're auctioning upwards, we actually really care about the unfinished auction at the top, the direction of our travel. If that happens to be an unfinished auction, we're auctioning up. So the top is more significant in an up candle than the bottom. So we've got to use this condition carefully. We've got to think about context. We need to filter out noise, and we can get some value from bookmarking these conditions. So let's hop back to Sierra chart and apply the unfinished business indicator to a chart and show you how this can work also with the advanced lookback filter and with emoji zones. And you can start to find good ways of bookmarking targets in your trading. So we're here again on our 8-tick reversal chart. I'm going to hide the price rejector, and I'm going to add unfinished business. Our first set of inputs is our lookback filter. I'm going to set the emoji zone visualization to extend until future intersection. You'll remember that this will draw a line until price trades again. Our default color for new unfinished business, we set to orange. It's an alert, it's a bookmark. And let's set the line width to something visible. Let's see what we get. Okay, and I'm going to call that UB. Whoops, UB. So what I've got here, anytime we're auctioning up and we've got unfinished business, I'm showing it. Well, that's not too useful, especially on this quite fast chart that's doing lots of rotations. I can't trade meaningfully off this. Let's go in a little bit deeper. Now I can use my advanced lookback filter to say, only show me when the session high or low has got unfinished business. Now this gets interesting. we're in the overnight session here. Here's our overnight high, auctioning up. We auctioned up here. This high overnight was not too high. If I'm sitting here on the hard right edge and I see that, I'm interested. It's telling me as we've traded overnight, 27.25 was not too high. So it's giving me a level as a potential target to trade towards, or if for whatever reason I've got a short bias, I don't want to get short down here. I'm going to wait and see what happens once we answer the question of, is there a price beyond this that is too high? But right now, this price is not too high. What happens? Well, what day are we? 29th, a few days ago in July. We opened during the day. Pre-market, we've run up and the overnight high is not too high. Let's see if we found this at all during the 29th. No, we didn't. We found it in the following overnight session. But what I do notice as I scrolled through the 29th, look at this. As we auctioned down during the second half hour, we made a new low at 8.49, and that was unfinished business. Now, ES typically will break the initial balance, the first hour range, on one side most days. It partly depends on market volatility. If we are pre-big macro events like FOMC or NFP, it might be a little bit more rangy and not look to explore. Sometimes if things are a bit volatile, new news comes into the market, it'll break both sides. But there are some good articles on the internet where people have done analysis of breaks of the initial balance on things like ESCL, 30 years, EB. You can start to get a sense of how many times one side of a range is broken. Now, for me, if I see unfinished business at the first hour's high or low, this is giving me a bias of a potential what I call an inside-out trade. We can see here very quickly we traded lower. Now, this one hasn't appeared because I have got a setting in unfinished business that allows me to require bar direction. This was an upwards auction. Do I really care about unfinished business at the bottom of this auction? Well, for me, because I'm also filtering on session high and low, I do. On my arbitrary 8-tick reversal chart, the context of the day, the session low, is more important to me than the direction of this 8-tick reversal chart. So in our second half hour, B period in market profile, we made another low. One of my favorite trade setups is, can I trade the break of the initial balance from somewhere inside the initial balance? So when I see this, I'm interested in potentially finding a way of getting short, thinking it may well be revisited. This example isn't going to do it for me because obviously it's a demo, and demos are always here to spite us. That we can see that earlier overnight session, one which I identified, did get resolved. Big sell-off overnight. Look how close we traded to that level, 3 ticks or so, before it got resolved. So using unfinished business at session high or low can give us some very interesting bookmarked targets to consider in our analysis as places to trade towards. That's something pre-market. I'm just going to scroll through this chart and see if we can find any other. Here's an interesting one. So look at this. We're running up pre-market. The overnight low is unfinished, but actually, if I bring up my price rejector, now I'm not going to use any lookback filtering on this. So I'm not looking across any bars, but I am tightening it up a bit because I want exhaustion and consistent absorption. Yeah. Exhaustion and consistent absorption. Require price reversal, no. Bar quantity, no. That should be a 0. What I was expecting was to see a price rejector here, and it hasn't shown me because I'm hiding the study. There we go. Still hasn't shown me. Okay, I've got those parameters wrong. We will oftentimes see a price rejector condition come in. I'm going to double check why we don't have that one. I haven't set the settings right. But using just a simple combination of two indicators, we can start to build some really neat trading systems where we say, if we are able to identify a target, then let's sit on our hands until we have got a decent entry signal, and we use that to go and trade towards the target. Let's have a quick scroll through here and see if we've got any. There's a great example. Matthias said price rejector didn't work because of the strongest option. You know, Matthias, if you spotted that and I didn't, you are an honorary emoji. Oh, what a guy. Big kudos to Matthias for that spot. He knows the platform better than me. So let's go back to that example. Fantastically well spotted. Here is unfinished business at the overnight low. Here's a new price rejector that came in. There's a supply and demand event. We trade towards it. That was overnight or pre-market run-up. Let's have a look at some other clean examples, just so you can get a sense of how we can start to combine this information. For me, I've got too much information on this chart, too many price rejectors, and it's actually too fast to chart for my liking. But it allows us to see lots of conditions and go talk about them. So let's have a look here. We're overnight, not interested in overnight. That's pre-market, that's not especially interesting either. Let's see if we can find an example where we've got, okay, that's also overnight, but a good one to talk about. We're after hours, quite early after hours. We go low, and we've got unfinished business here. Look at where we auction up to. We had new demand that converted into new supply here. It was tested and it held. It was tested again and it held. We have got this area of supply above us. At the point this prints, logically, we've got a target at what, 74.75. We've got a potential entry up here. We're not blindly saying it. We know that there's supply and it's been tested and it's held. So we can be thinking about putting sell limit orders, okay, one tick ahead, somewhere in the zone, depends how aggressive you are. We wouldn't have done it here. We had no target. We could have regarded this as a target, but this is giving us a really sound target, but this is not too low. So we could be thinking about a sell limit order here. Sure enough, we trade down to it. We have gone, what, 74 versus 78. We've got about 4 points, 15, 16 ticks versus in reality 5 or 6 ticks of risk. So although people always say, you know, we want to trade from the edges, sometimes when the edge is telling us it's not too far, we can get some really good setups by trading towards the edges. And that's actually one of the bases for my trading. I have limited time to trade. I'm interested in trading breakouts during the day. Here's another example. Day session on the 9th of July. We open very early during the open. We make a high. It's not too high. We trade back down into an area of new demands. We could have placed limit orders above this, through it. Here's our absolute hard risk. We're not really going to plow down through there. We've got very early in the session, lovely trade opportunity from 69.25 kind of area up to 72 area as we're exploring our range and going higher. But look where it stops. It stops at an area of new supply. So even though I'm only using two indicators, one time frame here, you can start to see how by being selective on filtering out for only the best signals and filtering out signals using the advanced Lookback filter to get these signals at contextual levels, you can start to get targets. If you don't have a reason to get out of the trade, then you have absolutely no reason to get into the trade. So we can use unfinished business to find targets. We can potentially use Emoji Zone levels as well to trade between the levels, which is actually what people are doing in prop firms. You're trading aggressively all day, trading between horizontal lines, and you're assessing the supply and demand. So Emoji Zone dynamic visualization is going to show you where there's new demand, new supply that's untested. You can pretty reliably say, fine, I've got new supply and new demand. It's unlikely to be broken the first time we see it. I've now got ranges that I can trade between, ideally in direction, but some others give you a bias for. So irrespective of whichever emoji indicators you're using, you can use the advanced look filtering to bring some context to your supply and demand analysis, and you can use Emoji Zones to qualify and track supply and demand events. So that pretty much wraps us up for today. We've gone about an hour and 20. I'm just having a quick scan of our questions. Jack has asked, have customers tried Emoji Zone indicators trading individual stocks? Yes, some have. There is a section on our website, it's saying, right, are you new to order flow, where we actually explore the pros and cons of different asset classes and applying order flow analysis to these asset classes. Big liquid stocks are okay, but I say okay by comparison to futures being really good. And why is that? It's because stocks trade in multiple venues, dark pools, different exchanges. So the traded volume that you're getting from a particular exchange or trading venue is not showing you the whole picture. The beauty of futures contracts is they are traded on single centralized exchanges. So if we want to see the supply and demand, we can feel pretty secure that we are seeing the full picture. Okay, if you're trading Apple or Google, some of these high volume stocks, sure, there's enough liquidity going on in the exchange that you're getting a good picture, but you're not getting the whole picture. And when I think about the equity in my trading account, my equity deserves only the best opportunities to be applied to it. And where I am able to make a choice about what trades do I put my equity at risk for, if I'm able to apply my equity to tradable contracts where I can get the full picture, or tradable contracts where I get part of the picture, it's a really easy decision. I want to trade with the best information for the highest probability setup. So I don't need more risk than that. There's enough opportunity trading ESCL, Bund, whatever, that I don't need to explore outwards into Apple and Google or Beyond Meat or whatever else. So that kind of wraps us up for today. Thank you very much for your attendance. We've had a lot of attendees, which is great. We'll see you in a week's time where we're going to go through Absorption Pro and advanced pullback analysis. That's going to be a really deep, really interesting session. We'll make a recording available early next week